all the market turmoil of the past few months just may have created the perfect opportunity for hedge funds and those who want to buy a bunch of stock and shake up the story. Some people call them activist investors. That's according to Ken Squire. He is the founder and portfolio manager of the 13D Activist Fund. He's also a brand new CNBC contributor, and his column for CNBC.com will be published tomorrow, but he is here now with a preview of it. Ken, welcome, by the way, and welcome to the CNBC family as a contributor. Good to have you on. First off, before we get into sort of what we're doing, I've never liked the term activist investor only because I feel like it, they used to be called corporate raiders in some ways. To you, what defines a so-called activist?
Well, first, thanks for having me, Brian. It's great to be part of the CNBC family. I agree with you. I like to use the fuller term shareholder activist. Shareholder activists are stockholders that are taking positions, long positions in companies. They're aligned with the other shareholders. They implement their activist agenda, and they're paying for the cost in many instances to improve the company, and all the shareholders should benefit from it.
Okay, fantastic. Good stuff there. So talk about why market volatility might increase this kind of activity, Ken, because normally you think, oh my gosh, sort of run for cover. You're under your desk if you're a hedge fund because you're worried about the market volatility. You say in many cases, it's kind of the opposite.
Well, yeah, for activism has done very well, not necessarily during the sell-off, but in the year, 2 years after a sell-off, activism tends to flourish for several reasons. First of all, activists are value investors, and they're value investors who create their own catalyst for closing valuation gaps. When the markets are down like this and the gap between price and value becomes so large, there's just so many more opportunities for them to choose from. Secondly, it's much easier for them to get their agendas implemented. In downturns and down markets, it's harder for bad management to hide, and it's a lot easier to get support from other shareholders who are also losing money on their portfolios. So, like, for instance, in 2009 was a banner year for activism after the downturn of 2008.
Hey, Ken, it's Tim again. Thank you for joining us. The question is, when an activist takes a stake in a massive company like Apple, can they really implement some change? And I give David Einhorn some credit long ago when he pushed Apple to really give more of essentially their free cash flow back to investors and forced Apple to become very active in capital markets. But talk about that. Talk about your approach and the size of a company that you think it's most effective to be an activist.
Yeah, thanks, Tim. That's a great point. I look at activism in mega cap companies as trying to turn around an ocean liner, whereas in small and mid cap you're turning around a Boston whaler. It's very difficult to really make a lot of big changes in a company like Apple. When you talk about Apple, I'll look at what Carl Icahn did, where he had an agenda which was purely financial to have them buy back shares when their stock was trading at roughly half of what it's trading now, and which ended up being good for shareholders and was good activism. But generally, the best activism happens in smaller and mid cap companies that are a little bit less liquid and might have more of an entrenched boards or operational issues.